What's up, everybody? Michael Silva here. Another day, another nothing burger that took place. As you can see, we're still pinned between 4,100 and 4,200. But there is something interesting taking place that I want to get out in front of everybody on today's Stock Market Brief show. We're going to be getting right into it, keeping today's show rather quick and to the point. Overall, what took place today? Well, everything was up in the green, including volatility. The big standout was in small caps. You saw regional banks take a little bit of a move up higher, which definitely helped out, as well as energy names as well. As far as what took place today, from a macro standpoint, we had a lot of Fed speak today, as well as NY Empire State Manufacturing Index. Tomorrow we have retail sales an hour before the open, and we have a lot more Fed talk going on. Now, if I'm looking at the SPY on the daily time frame, as you know, we've been just kind of going chopping sideways. From a bullish perspective, we're still above that year-to-date anchored VWAP, which is a positive sign, and we're above the quarter-to-date. This gray shaded area is the expected range based off of implied volatility in the options market going into tomorrow. So my thought process is this. If we stay, and by the way, this was an inside trading day, so if we start breaking to the upside, let's hit that daily upper. If we start breaking down to the downside, we'd be below that quarter to date, so be careful there. As I see it, it's still a coin flip as it stands. We can pop up and we can go and try to hit that yearly high, which is at 418.31, or we can potentially break down from the quarter-to-date anchored VWAP and come even fill this gap, or potentially even retest the year-to-date anchored VWAP as price has just really been going sideways. So we got to be prepared for both aspects of it. My thought process is this: as long as we can close and hold above the quarter-to-date, I think that the bias would remain more bullish than anything, and you can see that on the 15-minute time frame as well. We're above the week-to-date anchored VWAP, we're above the month-to-date anchored VWAP, and we're above the 5-day moving average, albeit that price has just been going sideways. So all of these trends happen to be just neutral. All right. So going into tomorrow, we have a 415.42 up to the upside of our daily expected move, 410 to the downside. And then we have our weekly expected moves posted there in orange. If you take a look at the Qs, right, tech stocks have been performing much better. And these ones look like they want to try to break out and try to get to that upper weekly and upper daily expected move. We're above an inclining 5-day moving average. We're above a month-to-date anchored VWAP that's inclining, and we're holding above the week-to-date now. It was the daily, but it's going to be the week-to-date anchored VWAP. So if we start taking out that, then I'd be a little bit more cautious to come down to the lower daily. And if it holds as an area of resistance, well, then it could potentially even come back down to test the month-to-date. Now, one other thing that I'm paying attention to is the rate of change between growth and value, and there is a negative divergence here. So the Qs are moving up, same with the relative strength line between growth and value, and there is a negative divergence that is forming. When we cross below the zero line from above down to below, we've seen sell-offs in the market take place. So you can see we crossed right here, we kind of came down and we sold off really quick, and then we got back above right over here and we saw the market kind of move higher. Well, as it stands now, we have a divergence on the rate of change, divergence on the RSI, and price action is coiling up very tightly in somewhat of a wedge formation. So it is going to be one that we want to continue to pay attention to. Before we get into the Nasdaq composite and some interesting stuff that I am seeing, I wanted to really quickly touch on ES on Bookmap. There are a couple levels that are of interest if you are going into tomorrow's trading session. 4,200 still has a level of liquidity. 4,175 is the one above us. And then below us is that 4,100 and 4,120 as well. Those are going to be some key levels to watch. I'll share the expected moves for this momentarily. Now, if I take a look at the summation index, the summation index looks like it's a potentially identify a potential change in trend here in the very near future. At least that's what it looks like. I want to call out, like I said, price action's coiling up here on the Nasdaq composite. We have a negative divergence there on the Nasdaq McClellan oscillator, and it is still well below zero, as this is pretty neutral. We had the potential change in trend right here. The market went down, and then we kind of just drifted up higher as this has been kind of coiling up tighter, and then recently just started trying to break out from those levels. Now, what I find very interesting here is as the Nasdaq composite is pressing up higher and kind of breaking out of this, prior high, and now it's kind of getting above, is this potentially going to be a bull trap? And what would it look like if it was? Well, a bull trap would basically, we'd get a higher move higher, boom, and then it would trap in some longs, momentum buyers, breakout traders, etc., and then come back in. And one of the things that I'm looking at here is on balance volume. So as the market has been pressing higher, you're seeing on balance volume kind of putting in lower lows, which has, been an indication of weakness to come. I've seen this multiple times where price would go up higher and on balance volume wasn't following or it was breaking down, and it was just not overall a good thing. Another interesting aspect here is if you just look at the volume bars, you can really see how price is kind of just drifting higher, and markets move between contraction and expansion, right? So expansion, and then now we're getting very, very tight here, which means we can break to the upside or potentially even break to the downside. But take a look at the volume. Not only is price contracting here very tightly, volume is too. You can see volume was high, then it was lower, then it was lower, and then today was just about the lowest, if not the lowest, volume trading day in the Nasdaq Composite in the entire year, right? Which is pretty impressive, right? We're looking at right over here. If you just look to the left of the screen, this day over here perhaps was lower. And if you go back through it, you can see, there wasn't any volume that was traded lower here in 2023. So as price, like I said, is coiling up, volume is contracting. So this tells me that, hey, there is going to potentially be a more explosive move, or volatility is going to start to expand in the very near future. And it doesn't go just for the Nasdaq Composite. We're looking at the S&P 500 or the ES and SPOOs, and all these are starting to coil up to a potential catalyst in the very near future. Another interesting chart I want to share with you is smart money versus the dumb money, right? So HYG, the high yield bonds, the bond markets considered the smart money. Then we have the equity markets considered, I guess, the dumb money. And a very simple way of looking at this, as you can find divergences here on the 60-minute time frame that could potentially lead us to see the market rise or potentially even see the market fall. And as we know, the SPY, we've just been in this trading range, and HYG has been in this trading range as well. So the correlation is typically positive for the most part, as you can see beneath the screen. But there are certain times where, hey, HYG might hit a low and a higher low, like so, but dumb money, SPY, the SPY, might actually, the dumb money gets more scared and then it sells off. And then this right here could be considered a potential positive divergence where, the smart money is telling us, no, we're buying high yield here. And then versus the SPY where it's like, no, we're freaking out and we're going lower. And sometimes this means that the price action of the SPY will resolve higher. But the flip side of this is also, if the smart money is selling off and yet the SPY, the dumb money, is pressing higher, this is telling us, hey, smart money is kind of exiting right here while the market keeps on continuing to press higher. And these divergences have played out multiple times and giving us insight to potential changes or changes in momentum in the S&P 500. What I'm seeing now is, you can see just in this trading range, HYG is much more near the low. As you can see, we kind of came off today and we just really drifted a little bit, more of a kind of a bear flag structure where it didn't really follow the movement in SPY today into the close, where we've been a little bit more consistent here. So you can see, we have a high, and then it kind of just, all matching highs pretty much here. Where if we look at that same kind of time frame here in HYG, you can have a high, but it's more towards the bottom of this range, which is looking a little weak. So if HYG starts kind of breaking down from this channel and the SPY is moving up higher, that could be giving us some insight that, hey, this could very well be a bull trap in the S&P 500. So this is one that I will be obviously paying closer attention to going into more recent trading days coming up. Now, if you guys want, go ahead and screenshot this. This is the expected moves. Because I didn't make a weekly recap video, I'll go ahead and share this. I share this daily with the Patreon group or my Discord group. You can see the daily expected move is right here. You have the upper levels, you have the lower levels, and I even include the 2 sigma levels there too as well if the market really starts moving, and it's for all of these products over there. You can see ES, right? We talked about the chart on Bookmap, so 4172 to the upside. Where does that look like? Well, 4172, it's basically right here where we see that order of liquidity. So this is going to be one that comes into tomorrow's trading session. And if we look at the lower edge of ES, it was 4125. So let's go back to this bookmark chart, so 4125, and you can see that's actually just about right where this order of liquidity is, right over here. You can see that spike, and then that on the heat map, the kind of the white line. This is the S&P 500, by the way, the ES on the close, and then these levels came in after, obviously, so we can kind of see what's taking place kind of behind the candlestick chart. That's all I got for you on today's episode. Everybody have a wonderful day.